What's going on, guys, and welcome back to another video. So as promised, today we're going to go through all things dividend related and look through my 50 stock dividend portfolio on Trading212, where we'll go through all 11 sectors in the market to see what stocks, dividend stocks that is, I have in each sector and how much I have allocated to each as well. So with all that being said, let's drive straight on over to Trading212. So here we are on Trading212. Now just some backstory before we get into the portfolio. This is one of 8 portfolios overall in my 0 to 1 million euro net worth 5-year plan. So I have others such as growth, ETFs, crypto, real estate, etc. as well. But for the purpose of today's video, we're going to focus on my dividend portfolio, which you can see on screen now. We only started this about 2 or 3 weeks back at this stage, hence why we don't have a whole lot of capital here at the moment, about €746, and we're up about 2.4%, which isn't bad considering the overall bear market since joining Trading212 here and starting this portfolio. So because it was down about 5 to 6% only not so long ago, but thankfully due to dollar cost averaging, we got in at cheaper prices in those dips, hence why we're back in the green. So hopefully as we push on now, we can get that up to double figures in terms of profit, and hopefully over the next few weeks as well, we'll get this up to at least €1,000, because I do want to have this portfolio up to minimum €5,000 invested by the end of this year. Now just before we look through each of my portfolio pies in terms of sector allocation, the reason I have 50 stocks overall, some people might think that's too much, some might think it's too little, but for me I think it's about right, because different sectors react differently to different market conditions, so there'll always be opportunity to dollar cost average when a particular sector is down, and then the sectors that are up, I just leave them right until inevitably they do drop as well, because markets are cyclical, hence why I have 50 overall, so there'll always be opportunities to dollar cost average. So we can kind of see here on the left, my pies. That's one of the main reasons I like Trading212 here, especially because we have 50 stocks. It's a lot easier to be able to create pies for different sectors to see how each sector is actually performing. First of all, here we have communication services, where we only have about €47 invested at the moment, which again, like all 11 sectors, I'm hoping to bump that up over the coming months, but we're up about 4.4%. We can see our 4 holdings here on the right. One is in the red at the moment, Walt Disney, down about 1.2%. Now, if I remember correctly, this was down about 6 or 7% not so long ago. In fact, it was down about 12% on my growth portfolio on eToro a few days back as well. But the other 3 here are doing fairly well. AT&T is up 11%, Verizon is up 3.1%, and Omnicom Group is up 7.58%. So another side note as well is, because we have 50 stocks to get through, we won't go through what dividend yield each of these have, but overall this portfolio has roughly about 3.5 to 3.8% annual dividend, which again is fairly good. You know, it's not anything amazing either, but again, it's a fairly respectable number to have 3.5 to 3.8% overall average yield across my 50 stocks. So next we have consumer discretionary, where we have about €92.50 invested. Now you can notice that we nearly have over double what we have from communication services, and that's mainly because I was dollar cost averaging in here, when a lot of these positions, which currently most are still in the red, but they were down a lot more. So that's why we have more invested, because long term, when we're getting in at a much cheaper cost, once the bull market comes back, we're actually going to make more of a profit. So we have 5 holdings here within consumer discretionary, and that 5 is my limit per sector. We can see here McDonald's is the only one of the 5 in the green at the moment, up 1.37%. And then the likes of Genuine Parts, Target, Starbucks and Snap-on are all down, with Starbucks down the most, 5%. So again, probably Target and Starbucks over the coming days I will buy more because they're down. Now usually I want to wait until my stocks are down at minimum 3% before investing further, again to get my overall average cost down. So again, I'm pretty happy with how it's going at the moment. So there is definitely room for opportunity to get into cheaper costs, which I'll be doing over the next few weeks. An example here are how different sectors react differently. For example, to the naked eye, consumer discretionary and consumer staples would be pretty much hand in hand, although there is small significant differences here. But for example, we can see consumer staples is currently up 4.67%, and we have €52 invested overall here. One in the red at the moment, which isn't that down that much, 1.7 in Unilever. And again, all 4 of the others are fairly in the green. Coca-Cola and PepsiCo up 6.8 and 8.7%, which I'm happy with in a short space of time. Again, all things being considered, with the market being down, this is pretty respectable in my opinion. We then have P&G up 7.6% and Walmart is up 1.9%. We then have one of my best performing sectors at the moment in the form of energy, up 16.5%. Now, to be honest, I'm quite surprised when I actually opened it here in the fact that Royal Dutch Shell has been delisted. I don't think I've got any notification about that. Now, I presume, I look back after this video, that I presume the capital that was there got reinvested into the rest of the pie in terms of sector allocation. But again, I'll look into this later on. Quite surprised at that one, I must say. But again, for now, the three other holdings we have at the moment, ExxonMobil is up 26.4%, which is very impressive. We have Chevron up 11.7% and BP up 13.07%. One of the sectors I have most invested in at the moment is financials, which again is one of my preferred sectors. We have €108 invested here. It's down 0.28%, so it's a fairly mixed bag here. Now, again, we have two in the red. JP Morgan and Chase is down 2.58%, and Goldman Sachs is down 3.66%. So again, I'll be quite bullish on any time any of these blue chip financial stocks go into the red, so I will be investing further within these two stocks over the coming weeks. Now, we have three currently in the green. One that was picked by you guys was Bank of Montreal, up 3.74%. Bank of America is up 1.84%, and Citigroup up 5%. So overall, pretty much a mixed bag here in terms of financials. But again, I welcome any of these going into the red because I get in at a cheaper price. My healthcare pie, just like financials, is pretty much a mixed bag as well, but we're up 5.49% overall, again, which I'm happy with. We have €68.59 invested. Two in the red here. Pfizer is only down 0.3%, and Abbott Laboratories is down 2.12%. Then we have three in the green, which are fairly well on. We have Johnson & Johnson up over 7%, AbbVie up nearly 17%, and Cardinal Health up 8.3%. My industrials pie has four stocks here at the moment where we are down 1.44%. Again, mixed bag here. 3M is down 6.6%, so I'll be sure to be getting on that and getting in a lot more invested in that. And Waste Management down 5.17%. Caterpillar is up 0.8%, and Lockheed Martin is up 13.7%. Now again, industrials, you won't be expecting too much overall net growth, but again, it's a consistent sector in my opinion, especially like the Waste Management, 3M, etc. All well-known dividend stocks. So I'll happily keep this pie, although I probably won't, let's say, have as much invested in industrials than I will in financials, etc. But again, it's a sector I do want to have exposure in nonetheless. When creating this 50 stock dividend portfolio, one sector I did find difficult to actually find half decent stocks in was materials. And again, just like industrials, I don't want to have a whole lot invested. In fact, materials is probably my least invested pie of the 11 sectors long term. But again, we have about €62 invested here, and we're down 3.3%. Four stocks here at the moment. Now again, I struggled to find four. This is definitely the hardest to find. Air Product and Chemicals is down 2%. Ecolab is down 13.19%. Again, we only have €21 here, so it'll be very easy to dollar cost average. Then on the flip side, we have International Paper up 2.4% and Packaging of America up nearly 11%. So again, like a lot of these sectors which we've seen in the last few minutes, a lot of them are mixed bags in terms of half are fairly well in the green with the other half in the red. So again, the ones in the red, long term, again, without trying to repeat myself, I'll be dollar cost averaging to get my overall average costs down, which again, long term will give us more of a profit. Now, along with the financial sector, real estate is probably the one I'm most interested in the dividend portfolio. Now, obviously, we have the likes of the tech, which we'll see in a few seconds as well, my tech pie. But again, that's a lot more interesting on my growth portfolio as opposed to my dividend portfolio. But real estate is definitely one that I really enjoy and find very interesting. We have five here at the moment, down 0.66% overall, which again is pretty much break even, more or less. We have three in the red. Realty Income down 1.37%, which again is a dividend, monthly paying dividend stock. We then have Stag pretty much break even, and Essex Property Trust down 4.3%, so I'll be getting on there as well over the next few days. And then we have the likes of Welltower up 4.6%, and National Realty Properties pretty much break even as well, 0.18% in the green. Mentioned a few seconds ago, technology is up next, down 0.86% overall, and we have about €79 invested. We can see here all bar one are in the red, IBM being the exception, up 12.6%. Now we have the likes of Microsoft down 1.5%, Intel down 8.3%, again definitely going to be buying more there. We only have €14.50 invested at the moment. We then have Cisco Systems down 1.18% and Accenture down 1.3%. So overall, again, there's not a whole lot to write home about here in terms of most of these are pretty much down only 1 or 2%. With IBM up 12.6%, but we will be investing further in Intel down the line. But as mentioned a few seconds ago as well, my growth portfolio, the tech stocks in there are a lot more exciting. These are the kind of older school tech stocks, that makes sense. So again, I'm pretty happy where we stand at the moment here. So that's pretty much it for now in terms of tech. Just like materials as well, utilities is another sector that I did find really difficult to find half decent stocks in. We're down about 1.5% here at the moment, which again isn't bad at all. Now you can see the complete mixed bag here as well, just like a lot of these sectors, which again poses opportunity to get in at a cheaper price in the red ones. But again, Duke Energy is up 3.9% and Consolidated Edison up 6%. And then we have the complete polar opposite here. In terms of Next Era Energy down 6.9, and then American Waterworks down 2.7. But again, just like materials, etc., I don't want to have a whole lot of capital in here at all. Again, probably in the next dividend video, we'll actually break down in terms of how much or percentage we have in each of these 11 sectors in comparison to my overall account value. And we kind of start to see as time goes on, probably materials, utilities, and industrials will be the three that will be at the bottom of the list. And then we have the likes of the financial sector, technology, consumer discretionary, etc., probably at the top of the list in terms of the highest weightings. Okay, so just the very end of this video as well, because we saw earlier the Royal Dutch Shell was delisted, I did a bit of digging here and we can see that probably this morning actually that it has been delisted, and now we have shares in Shell, which we can probably see just behind here at the moment. We have €11.51 overall, and we're up about 11% there as well, so already I'm very happy with that. Now again, we'll add that into my energy sector pie now, so we'll actually have that in there going forward. So that's what I was that clears up the confusion there, why I was wondering why it was delisted on my overall pie. But again, we'll add it in right now. So I've added it in here now. We can see at the bottom, Shell is here, and Royal Dutch Shell then is delisted. I can't actually export that from the pie at the moment. I presume that will just fall off over the coming days. But we can see now, again, I presume this is completely skewed, but it says now we're up 49.44% in this energy pie overall. But again, that's probably mainly due to the overall delisting here. But again, I'm happy nonetheless that it just was a kind of move to Shell. So again, at the moment, that's where we stand with my overall portfolio. We have 50 stocks, all dividend related. So that's a pretty much brief breakdown overall of all sectors within my 50 stock portfolio. There's 11 in total, kind of indicating the 11 different sectors within the market. If you have any questions as well on any of this, please let me know. Now I know these kind of figures aren't too exciting in terms of the amounts or the monetary amounts, but again, over time, this is going to build up, and I'm hoping to get this into the thousands over the coming months. So I hope you follow along on the journey, and if you haven't subscribed already, it would be brilliant if you do so. So thanks very much. That concludes today's video. I hope you all enjoy the rest of your day, and I will see you all in the next one.